It's 2024, and many people are priced out of the housing market, and they're sharing their frustrations. Like a viewer on my channel, Ivan Franco 458, who recently commented, "I live in West Palm Beach, trying to buy a starter home at $400,000. With mortgages and fees, your total monthly cost is $4,000. Not that affordable." So will home prices finally come down in 2024? That's what we're going to find out today. We're going to walk through this together. In my last video, we talked about 5 expert housing market predictions for 2024. And today, this is part 2 of the video. We're going to go through 5 more predictions by 5 more experts. And we're going to gather all 10 and look at, hey, where are all these signs pointing? What should we be looking for in 2024? And so here's the summary on the last video we did and what experts thought of the 2024 housing market. Meet Kevin said about a 3% drop in prices. So did Morgan Stanley, 3% drop in prices. Zillow, 0.2% drop in prices. National Association of Realtors, that is 0.7% increase in prices. CoreLogic said 2.9% increase in prices, and the average drop of 0.5%. So you take all those experts, average them together. So far, 0.5% drop in home prices this year, 2024. And so today, looking at 5 more experts. And if you get any value out of today's video, please do me a favor, lightly tap, don't smash your phone, lightly tap that like button for me. And also subscribe if you haven't done so already. I post updates twice a week about the national housing market and helps you be a better buyer, seller, or investor in real estate. Okay, let's get going on our second group of predictions. Okay, our first prediction is from Fannie Mae. And for those of you who don't know, Fannie Mae is an organization, it's a government entity that essentially backs all of the mortgages or many of the mortgages across the United States. So when banks loan money to home buyers, oftentimes they're packaging those up and selling them to Fannie Mae to then get liquidity back and obviously lend it again. Fannie Mae will take those mortgages, package them up, and sell them usually as mortgage-backed securities. Anyway, Fannie Mae went ahead and did their forecast for 2024, and here it is. Elevated mortgage rates and a slowing economy will present a challenge to the housing market. Home sales will remain near current levels, and inventory will not increase substantially as mortgage rate lock effect keeps existing homeowners locked into their current residence. Favorable demographics will keep the share of first-time home buyers elevated, and with limited inventory, upward pressure on house prices will remain. In this scenario, home prices will rise nationally, increasing 5.4% in 2023 and 2.6% in 2024. So there's their call, folks. Fannie Mae saying 2.6% increase in home values for 2024. Our next prediction is from AEI, or the American Enterprise Institute. Now let's look at what they had to say. Our base HPA projection, their HPA is their home price appreciation index. It's how they measure home prices and home values. So our base HPA projection calls for a year-over-year increase of 5% and a 4% by year end 2023 and 2024. So it looks like 4% increase in value from AEI. And they're saying with lower rates and continued tight supply, our 4% projection for 2024 has upside potential. So they're saying basically base case is 4% increase, but they're seeing upside to that 4% increase could be more than that. Okay, so AEI provided a little more insight to what they're thinking. Despite the subdued rate of purchase activity and historically high rates, year over year, HPA, that's their home price appreciation index, has begun to accelerate. This is because buyers are well qualified and highly motivated by historically tight supply. Rising yet still low unemployment rates, low levels of foreclosure in most states, work from home, and continued home price arbitrage opportunities help provide support for HPA. So they're like other experts predicting that the tight supply and the obviously influx of first-time home buyers is going to keep that price sticky or increase. And they're actually pretty bullish, saying of the experts so far, saying 4% is the base case, but could even be higher. Usually bullish. Our next prediction comes from Realtor.com. This one really surprised me because usually they're bullish. Because they support mostly real estate agents and brokers. They're usually bullish, but now they actually came back with a prediction of negative 1.7%. So they're saying home values are going to drop negative 1.7% in 2024 this year. So they kind of provided this little guide that talks about inventory. It's kind of like a little cheat sheet, but on here they call the forecast for home prices. You can see right here, partly sunny, I guess. So a 1.7% drop in home values, I guess, signals that there are opportunities for, buyers now, because home prices aren't rising. They're projecting them to actually drop slightly. Now, remember, keep this in mind. Historically, over the past, 20 years, home prices nationally have increased 6% on average per year. So the call of negative 1.7% or positive 4% is definitely under what we typically see on average of the 6% growth. So even though we just saw 4% from AEI, saw 2.6% from Fannie Mae, this is 1.7% drop in prices from Realtor.com. And even that is a far cry from where we were at 6% each year over the past 20 years in growth. The other thing to look at here with Realtor.com is they're projecting a negative 14% change in inventory, the active inventory for sale throughout the United States. So it's interesting that this 14% drop in inventory doesn't signal home prices actually increase. They're saying they're going to drop. All right, next two predictions are from YouTube folks. And this, the first person we're going to look at is a lady named Melody Wright. And Melody has a lot of experience in the mortgage business. She's worked with a lot of different mortgage companies over the years, and she brings a lot of knowledge. She has her own YouTube channel. You should check it out. And so now we're going to look at a video that she did. She was on a video with her and another individual who we'll talk about in a second, Mike Zuber. And they both talked about the 2024 housing market and where prices could go and why. I have the link in the description below as far as the YouTube link, and I encourage you to look at her page. And so both these individuals have some deep experience in real estate, and they both have their own YouTube channels, but they are vastly different in how they think about the market and what they think is going to happen in 2024. Let's check out Melody and see what she has to say.
Yeah, I actually want to go to 2024 and 2025 because you dropped a little thing there that I want to go scratch. I want to be clear so I don't misquote you. Median home price 2024 nationwide down 5%. 2025 worse than 2024. Did I summarize that right?
That's correct. And I'm looking at about 12%, I would say, in 2025. Ooh. And that's if everything just keeps going as is. Nothing changes. We don't have a credit crisis. Suddenly we don't have a big bank blow up and 30,000 people lose their jobs. That's the kind of thing. But that's if we just keep going right now with nothing else changing.
Okay, so Melody thinks that prices of homes will actually decrease 5%. Sounds like that's the minimum she thinks. And then in 2025, she's saying prices will drop 12%. That's a total of 17%. So I would definitely call her the more bearish of the calls we've heard. In fact, she actually has the lowest prediction of house prices, of house growth of any expert we've looked at so far. We've heard negative 3%. We've heard negative 4%, but we haven't heard anything greater than that. And now Melody's coming in and saying negative 5%. That's what she thinks is going to happen next year. The last expert is Mike Zuber. Now, Mike runs a YouTube channel and a company called One Rental at a Time. This guy is awesome when it comes to real estate investing. If you want to get into real estate investing, buy your first rental, I really encourage you to check out his material, his book. He has tons of people on his website and on his YouTube channel that have certainly helped me, and they've helped a lot of people I know. So I'd encourage you to check him out. And he's someone who has deep experience in investing, real estate investing. He has a lot of financial background. He, I believe, has an MBA as well. So Mike knows what he's talking about. And let's see what Mike has to say. Again, he interviewed Melody, and Melody already gave her prediction. Now it's time for Mike's prediction.
It's really, so let's talk about 2024 because we certainly disagree about 24. I think the chances of being up 5% are greater than, and again, we're talking national. We're not talking Austin or Miami or, your city is your city.
Yeah.
And I think most of that is because I see the chances of quote unquote a soft landing, meaning positive GDP growth all 4 quarters. I see interest rates kind of settling in the low 6s. I really hope we don't crash to the low 5s because that would be bananas. But when I look at 2024, I would say unemployment stays below 4.3, rates are, call it 6, and we have no recession. And in that case, I'm going to call national up 5%.
Okay, so that's completely different than what we heard from Melody, right? I mean, Mike is saying, hey, they're going to go up 5%, minimum 5%. In reality, both of them are saying the same thing when it comes to, hey, if the economic conditions change, no kidding, right? These numbers could drastically change. But Mike's call is completely the opposite of Melody's. Melody says, hey, it's going to be 5% drop. Mike says 5% gain in price. All right, so those are our 5 experts from today. And we can add that data into the experts we heard from the last video and kind of aggregate all that, find out what's the average, right? Before we do, though, I'm going to give my take and my call as far as what's going to happen next year. There are 3 things I look at when I look at the housing market right now nationally. I think certain metros will see bigger price declines than others, right? No kidding, Jason. But specifically, areas that were pandemic boom towns like Boise, Austin, Nashville, I think they may suffer because the migration has slowed, and that could be what was driving a lot of the demand that they were seeing in their home markets and causing prices to spike like they did. Now they're coming back down. So I think certain markets across the country will see larger drops than others. I also think areas where there's a lot of new construction is going to suffer as well. So for instance, like here in Ohio, there isn't a lot of new construction. So I don't think prices are going to suffer. But in areas like Austin or Dallas, Nashville, again, and some other areas like Las Vegas or Phoenix, they may see more price declines because there's a lot more new construction, new homes, and more inventory usually will drop prices if the demand can't keep up with that inventory increase. So number 2, I think markets where inventory, affordable inventory specifically, is tightest will see the highest rate of appreciation. And since the kind of pandemic, gotta buy real estate rate today, whatever you do, that kind of narrative is over. And that mad rush, I think, normal stability will start to come into play. And if an area has less affordable housing than another area, I would expect the area with less affordable housing to increase faster. And number 3, I think generally the move-up buyer is going to stay put. I don't think mortgage rates will come down under 6%. At least I hope they don't. If they do, I think we're in for a wild ride with prices. Hopefully they don't and they stay above 6%. If they do stay above 6%, I still think that move-up buyer, the person that owns their house right now, maybe with a 3 or 4% or 5% interest rate, isn't willing to sell that house and then move up into a more expensive house with a higher interest rate and a higher payment yet. I think interest rates need to drop more, or affordability through maybe lower prices or probably just higher wages is going to come into effect. And when that does, maybe they decide to sell. But for right now in 2024, I think most move-up buyers will stay put. So overall, my call nationally is that prices will increase about 3%. I'm not as bullish as Mike Zuber, but I'm also not a complete bear like Melody or Morgan Stanley or Meet Kevin, where I think they'll actually drop. I think they'll go up, but only go up about 3%. And remember, that is kind of a bearish call because historically over the last 20 years, home prices have actually increased about 6% on average, as I said earlier. So 3% increase in prices isn't really all that extraordinary. Okay, and so because I live in Ohio, I want to just cover Ohio really quick. If you happen to live in the Buckeye State or you're thinking about moving here, I think home prices will actually go up much more than they will nationally. I think here in the Central Ohio area, Columbus and surrounding counties, I look for them to go up between 5 and 10%. Actually, in the surrounding counties, they could even go up even more. So right now, there are a ton of institutional buyers that are flooding into Columbus, buying up the affordable inventory. And I think that will start to spread out to the surrounding counties as investors and buyers realize that, hey, there is no new construction hardly inside of the Columbus area. So we're going to have to branch out into some outer counties. And through all this, hanging over everything going on with the market in Ohio, you have Intel building their fabrication plant locally just about 10 miles from me. And that is going to bring in a ton of influx of workers, construction folks, service workers, and everybody to support that enterprise. It's a massive $20 billion, upwards of $100 billion project. And so I look for that to really start to take hold in 2024. Home prices could go up more than 10%, but I'm saying my base case, 5 to 10% for Central Ohio, with the surrounding counties could go up, 15, 20% as people start to realize they have to venture outside of Franklin County in order to find some affordable housing. Okay, so let's sum up what we've seen from all the experts, including me. All right. So you've got Meet Kevin, -3%, Morgan Stanley, -3%, Zillow, -0.2%, NAR, 0.7% growth, CoreLogic, 2.9% growth, Fannie Mae, 2.8% growth, AEI, 4% growth, Realtor.com, 1.7% drop, Mike Zuber from One Rental at a Time, 5% growth, Melody Wright, 5% drop in prices, and Jasson Farrier, 3% increase in prices nationally. So in conclusion, that's a 0.5% increase when you average all these predictions out, 0.5% increase in home values. So not too shabby, right? I would say it's pretty realistic and pretty bearish. Remember, 6% is average. So 0.5% increase in prices is really well below average. Now, if you've been waiting for a housing market crash, however, this signals the fact that home prices are likely to keep going up. I'll bet a smaller amount than we're used to lately. That will keep going up every year and consistently. And so if you're waiting for a massive decline in prices, I'm not sure we're going to see that, at least until affordable inventory starts to tick up substantially. And really, even the most bullish person at 5% isn't predicting what the normal house appreciation rate is of 6%. So remember, real estate is hyper local, down to your subdivision, down to your price point, sometimes even down to your street. I mean, everybody knows a story of one street where houses are priced here and another street where houses are priced here, right? So really, you have to pay attention to that hyper local market analysis and watch the inventory. The inventory is going to tell you where prices could be going. If you're looking in the $300,000 range and you see $300,000 houses hitting the market and not selling, that's a signal that those prices could start to come down. However, if you're not seeing a lot of houses in your price range, that may mean prices are sticky or could continue to climb. And so that's what I would do. I would get with a realtor, get with a real estate agent locally, even do the research yourself. Ping me in the comments. I'd love to hear from you. Love to find out what's going on in your local market. We always help each other through that. And remember, nobody has a crystal ball. So these are just predictions, right? Predictions are wrong all the time, but we will track this throughout the year. I'm going to look at this maybe halfway in the year, maybe after the first quarter. Look at, hey, where are prices now? Are these experts right? Am I right? I don't know. This is what I think is going to happen. This is what they think is going to happen, but you never know at the end of the day. Okay. Hey, listen, thank you for joining me. I really appreciate your attention. Have a great day. We'll see you on the next video.